everybody. Is it 1 o'clock? It's Tuesday at the Tuesday Tip with Katie Crown. I'm so excited for those of you that have joined. Thank you so much for week after week attending these. I don't know, I call them like mini TED Talks almost, but I am here to provide advice and any kind of support related to business, consulting, even legal matters. And so for today, we are going to talk about tax tips. It's tax time. It's going to be in April, and I wanted to make sure those of us that are creators and entrepreneurs know that there are overlooked exemptions or overlooked deductions that all of us will likely be making this tax season. So I want to do my part and make sure that I share some of the important ones. So I've seen many creators that wait until the end of their live or the end of their recording to say, oh, this is, I've got a big tip. You have to wait to the end. I'm not doing that. I am actually going to open up with my big hot tip of the day. And I'm also inviting people as they come in. Hi there, Hudson. Hi, Terry. So let's get started. One of the biggest misconceptions is that if you work from home,
Yeah, man.
later, and if
What's
you
the
are
word be?
in as a guest, if you would please mute, that would be awesome. Thank you
You
so
want to
much. But in
you
the end,
you want to battle?
if you work from home and you would like to be able to use your business space within your home, that is a legitimate write-off. So, for example, a lot of people say I'm either paying rent or I'm paying my mortgage, and I can't use, like, I don't have a write-off that is eligible for me to use, but it is. So, you would take a percentage of the space that you use in your home based on your square footage, and immediately you can write that off as your business use of home space. That's something that's pretty standard. One of the ones that I have just realized within the last, I don't know, short little while I was doing some research for all of us is the hiring of non licensed or non certified assistants. So, this one's kind of funny. The whole goal behind the tax season is to decrease your amount of net income as much as possible so that Uncle Sam doesn't end up with even more money than he already gets. So, if you are a trucker, for example, that's one of my favorite groups. I have started many trucking and logistics companies and working with veterans that wanted to go after government contracts as brokers for brokering loads. And one of the things that I hear consistently is, oh my gosh, is there anything else that I could write off besides my fuel and my truck maintenance? Absolutely. Get an assistant. Now, what I mean by that is you don't have to go out and hire somebody. If you have a sister, if you have a friend that would be willing to help keep your receipts organized for you, put them in chronological order, whatever the rate is that you all negotiate for pay would then come out of your earnings for the year with Uncle Sam or for tax time. So the creation within your business as an entrepreneur, creator, a truck driver, owner, operator of a bookkeeper is absolutely a legal and useful way to be able to have a line item to take out of your earnings for the year. In my case, I am a consultant. Now I'm a consultant that comes on weekly and shares my tips with everybody, but I have a dependent. It's my son, and I don't fall into the income bracket, for example, where you would qualify for like an earned income credit or something like that. However, my son helps to edit my videos. He helps to help me when I'm creating like a highlight reel. He helps when I need someone to pick music. So I pay him for his services. So he now is basically a line item deduction for my earnings for the year because I am indeed paying an assistant for their support. The important thing to remember, a bookkeeper, an assistant, this does not have to be a certified accountant. It doesn't have to be a certified anybody. It could just be an assistant or someone that is helping you to pursue whatever your business goals are. Now, as creators, a lot of us have purchased high-end, lighting, which I have not, or cell phones, I have not, or laptops, whatever the case may be. Those are all expenses that are able to be claimed if you are using them for the purposes of operating your business. Those of us who get onto TikTok to do fun dances, which I've not done yet, I might at some point, but not yet. But for those of us that get onto TikTok to do fun dances, if you don't have an established business, then I don't think that you could write your electronics off. But for example, if I have two phones, there used to be this song, I've got two phones, one for the plug, one for the load. I know a lot of people do not expect me to know that song, but I do. If you have two phones and one is specific or only used for business, that is the line and all of the expenses associated with it that you could most certainly use as a line item deduction when you are itemizing your taxes. Because if anything is deemed ordinary and necessary use for operation of business, according to federal law, this is not according to Katie Crown, this is according to U.S. Code 162. So if I get it wrong, I will send you to the website or send you to the federal government to fact check me. But it is actually, if it is a ordinary and necessary use for your business, then it is most certainly a tax deduction. So those are a couple, like off the top, things that were super easy and to me seem to be, just out the gate. We're truckers when we're talking about things to deduct besides fuel and maintenance, your clothes that you have to wear associated with your work. Now, in my case, I would love to be able to write off my wardrobe, but I cannot. So for those of us that can, if you have a specific uniform, I'm going to call out my favorite designer, Carhartt. Isn't that funny? We've got Carhartt sweatshirts. We've got Carhartt overalls. But guess what? We're not using them for work, but some of you are. And a lot of times people think, well, unless it has my business's logo on it, or I have purchased it specifically for my business, or I'm an owner-operator and it has the name of my company, those are the only items that are eligible for business use or work use of your wardrobe. And that's not true. So if in the seasons you are you have a Carhartt section in your closet basically that you are utilizing only to keep warm for work, that is actually an expense because you have to be able to be dressed for the weather. If you're working outside, if you have a business as a lawn care professional, as a trucker, or as anyone else, as long as it is ordinary and necessary use for your business, it can be used as a tax deduction if you are itemizing your taxes. So, business equipment, clothes, use a dependent or hire a non-licensed assistant to decrease your annual revenue that you bring home that Uncle Sam is going to be expecting a good chunk of, are a couple things. The next, for those of us that are creators and entrepreneurs, when we are doing either ads on TikTok, for example, or if you're paying subscriptions for the editing services that I'm able to use one of my awesome children for, those are all expenses that, again, according to federal code, can be associated directly with your business. And then upon being directly associated with your business, you are also able then to use them as deductions. So it's super important to know and understand how many items or how many coins we are all leaving on the table when it comes to operating a business from your home. Business structure is a whole separate topic for Katie Crown for another day. But whether you're set up as a LLC, an S Corp, a corporation, a sole proprietorship, all of the same rules still apply. Typically, the IRS is going to be looking for you to have a separate EIN number associated with your said business in order for these deductions to be claimed as itemization on your taxes. So, Business use of home. I have an office. Some folks who are using like a studio for a podcast, they're using, for example, their entire basement or their entire garage and wondering how can I monetize or actually be, repaid from the IRS for using this space. You can. Even though you park your car in the garage, if you use your garage as your business space or your basement as your business space, you would just calculate how much time you're using in said space that's dedicated for business and subtract from the square footage of your home. And that is what you would calculate as your annual business use of home space. If you're like me and you work remotely and always have, for many years, I worked remotely for someone else under a W-2. And then now, more recently, I work for myself. I own my own consulting company, and that's all I'm doing. So in those cases, you then are able to claim some of your household expenses. If I'm online all day, 8 hours a day, 4 hours a day, a couple hours a day, I'm not only utilizing my lights, I'm utilizing my gas. In some cases, I'm utilizing whatever, but I'm definitely utilizing the internet. So those utilities and things that you use during your dedicated work from home time are also legal. I've already given the code, US code 162, tax code. Those are legal deductions, along with any equipment that you may purchase, lighting, laptops, podcast microphones. All of those things can be claimed and used as deductions during tax time. The other thing that I wanted to make sure I call out is depreciation. Some folks, when they're doing their taxes, they don't understand, like, what does depreciating the value of something, like, what does that mean? So in English, because I am not a CPA or an accountant, it simply means if I have made a major purchase for my business, I'm either going to claim the entire purchase in the tax year that I'm preparing my taxes for. Let's just use $5,000 as a round number. Or I can take that $5,000 purchase and depreciate it over multiple years. It should be at least 2 or 3. So at a minimum, now, instead of taking my whole $5,000 deduction from my net income in one tax year, I can divide that $5,000 into 3 deductions for 3 prior years or 3 forthcoming years for the investment that I've made for my business. So hopefully that helps a little bit. The dependence piece. Now, a lot of people have asked me, okay, what about our adult or aging parents that we support, but they're not technically a dependent? This would be an area where if said family member is good with a computer, if said family member can help keep you organized or answer your phones or whatever the case may be, a lot of the contributions that you make to your family members, if you have a business and they support you in it and whatever their capacity is, that falls under that umbrella of a personal assistant, an assistant, or even a bookkeeper, like we discussed earlier. So it is not against the law, of course. Whatever is ordinary and necessary for you to operate your business is all that we are really discussing today, because that's what falls under the tax code and the federal code that we were discussing. Those that post from their car. So this one's interesting. Last week, when I wasn't actually live and coming to you from my home office, I think I made my live from the parking lot of like picking my daughter up at school. It was horrendous. I couldn't figure out how to get logged out. We looked like a deer in headlights, and it was really funny. But those that post from their car, if you are posting, whether it's coaching tips, training, anything educational, it's related to your business and it's ordinary and necessary for you to grow your business, whether you are marketing to a larger audience or if you are sharing tips and tricks and trades that are related to your business, that makes you eligible for mileage exemptions. So for example, those of us who travel for work, if you are either doing your videos at a specified location, or you have to drive to a client site, or you are working even with an employer, if they're not paying for your mileage is not free to anybody. It's wear and tear on your vehicle. And if you take a standard deduction, that's different than when you itemize. But if you itemize, then you are eligible for the 72-cent mileage rate, which is new within the last couple of years. So any miles that you use utilizing your vehicle for your business, it is a ordinary and necessary expense for you to grow your business using your car. You can absolutely tell your accountant, or when you are filling out your taxes, that you've used your car for this percentage of time or have driven as many miles as applicable for a deduction. So then my next piece, and I'll leave time for questions, because if, as I always say, please like, comment, share. My sweet sister Terry, I am wearing your lip gloss today, sent me flowers or diamonds or something during my last session. I don't know how all of it works, but it's good. But do like, comment, and share, and I do promise that after my tips and tricks are over, they will live someplace where they can be evergreen, and you can go back and watch them if you have other questions. But where I was headed, which was super important, was other expenses. So out-of-pocket costs can be extremely high during this season. I don't know about you guys, but for me, this is not a time where either A, I want to be giving away extra money unnecessarily, or B, I don't want to be wise with the choices that I'm making and how I'm spending my money. So one question that I got recently was, if insurance didn't cover a specific procedure, or it didn't cover all of something that needed to be done, are the out-of-pocket expenses tax deductible? Yes, they are. So out-of-pocket expenses can be claimed, and the reason that you should know, the nuance of this is, again, Uncle Sam and us all that are law-abiding, tax-paying citizens, we want to decrease the amount of our net income. And anything that you are paying that's not covered by insurance, that is premiums for yourself or your family plan, or different procedures that you've had to pay for your family that are not covered by your insurance, and they become out-of-pocket expenses, whether they are associated with your business or personal. If you itemize your taxes, that's most definitely a deduction. So I'm going to go one step further. My assistant, my bookkeeper, my editor, who also is a dependent, but he works for me, right? He's my kid, I'm paying him. In that case, those out-of-pocket expenses can be accounted for if you have set up a HRA or HSA savings account within your business. That's tax-free, meaning any money that you have put aside or that you're paying into to support your bookkeeper, your assistant, your personal assistant, their expenses, those are deductions that can also be recognized and itemized. Now, am I talking about braces or, regular maintenance things for our children? No, not necessarily. But if your worker can't come to work because they've had like a major dental problem or a major health problem, and there was this huge out-of-pocket expense, that's technically a necessary and ordinary expense associated with being able to operate your business. I hope that makes sense. Things like these type of tips are the reason, hello, Cousin Tony, these are the reason that I love being a consultant. If I were an attorney, I would be bound by whatever state's bar laws are. If I were an accountant, I would be bound by whatever the fiduciary responsibilities are for accountants. But as a consultant, not so much that I am like, free reign. However, it gives me an opportunity to have a really wide and vast net of information to be able to share with all of you. And every week, I'm here with something new. So please be sure to like, comment, and share. And every Tuesday, I've been pretty consistent. I am on at 1 p.m. Central. This week was saving coins for all of us, or being able to keep our coins, and how we can approach this upcoming tax season with a bit more fidelity and a bit more, let's just call it financial literacy, knowing that the overhead expenses for working from home, as a creator, as an entrepreneur, a lot of those things are tax deductible and can be claimed as deductions when you're itemizing your taxes. One of the other and final and last pieces that I did not touch on, there are a lot of creators that do makeup, or that are doing, I don't know, cooking or selling bread or creams or whatever the case may be. All of the items that you have to purchase in order to operate your business, the items that you have to purchase in order to give a review of someone else's product, or the items that you have to purchase in order to craft your creams and whatever else, those are overhead expenses that can be used to operate your business. They would be necessary because without them you'd have no business. Thus, they then also become tax deductible and things that you can include on your itemized tax return as a content creator, as a influencer, as a entrepreneur, a trainer, a coach, and those of us that are owner operators or even in the trucking industry. Those are items that you could also benefit from as well if the tips that I have shared today have been helpful and useful. So in closing, as long as I have an account and I don't get banned for any particular reason, don't be shy. You can reach out to me directly, like in my DMs. I would love to see some direct messages that are related to what I do for a living. It would just bring me joy. But ask me any question. I have a great deal of experience, not only in self-represented litigants, as folks that are representing themselves, or pro se litigants within the court system, helping with process and procedure. I also work very closely with those that are in the entrepreneurial mindset and would love to take their dream and make it able to be monetized into a business. I'm very skilled at being able to support folks that are trying to find the path to formation of their business. And then I work with corporations because it is important to understand what is making each department work so that you are achieving whatever the desired goal is for your team's KPIs, which is basically your goal. So, in closing, thank you all so much again for coming. I'm floored that weekly I have as many guests as I do. Thank you, Terry, for my delightful lip gloss. I really appreciate the combo. I don't know where you got it from on TikTok Shop, but I would be happy to share with my viewers where it's from. And then for everyone else, I look forward to seeing you next week for Tuesday Tip. You can let me know if there's something that you would like for me to discuss, if there's something you would like to go into further detail about in my areas of expertise. I'd be happy to cover it. The topics always come from either someone reaching out to me or someone asking me, or just things that I hear in passing. Identity theft is another good one that I would love to talk about. We did a whole segment on scams and scammers, which was pretty funny. But if your identity has been compromised, there are ways where you can work directly with the FTC in order to make yourself whole again. So that's everything. Happy St. Patty's Day. I wore green today. Because it's the color of money, and today's TikTok tips, or Katie Crown the Tuesday tip, was about keeping our coins, and it's also St. Patrick's Day. So enjoy the rest of your day, everybody, and you can find the long versions of my content on my YouTube page, which will be linked in today's after live share. All right, thanks. Talk to you soon.